My portfolio is no secret. I've been sharing it openly for months, but I haven't gone over every one of my holdings since my very first video, and that was not a good video, and I don't recommend that to anybody. And second, it's been about 5 months since then. So here we go, my entire $42,000 portfolio. But first, if you enjoyed the video, be sure to like and subscribe to the channel. It really helps me out a lot. I have about 29 different holdings that I'll be going through, so I'm going to be putting up a little graphic on the side with a bunch of information about the position that I have. Simple stuff like how many shares I have, my portfolio percentages, and how much of a dividend that these companies pay, along with some other information. I've also worked out on something that's going to help visualize how fairly priced these companies are. So it'll be like a little star system where if like it's 1 star, it's really overvalued, probably 30% or more. 2 stars, it's between 10 and 30% overvalued. 3 stars being pretty close to fair value, and so on, all the way up to 5 stars. Just make sure that you take all of these with a huge grain of salt because my predictions are by no means perfect. It's just something that I think is going to help put where my mind is on where I think the good prices to buy these companies would be. Starting off with the industrial sector, we have Lockheed Martin. Lockheed Martin is a defense contractor that creates weapons and defense products for the US military and its allies. I currently own 3 shares representing about 2.4% of my total portfolio. They have a forward dividend yield of 3.3%, and they will pay me $33.60 a year. The recent share price was from their last earnings where they projected lower growth than expected. Regardless, they are still very undervalued. I've estimated their fair value to be around $457. The second company in the industrial sector is Caterpillar. Caterpillar makes heavy industrial equipment for construction and mining, among other things. I currently own 1 share. They had a recent share drop where they went down into the low 190s, so I wish I had bought more, but oh well. Hopefully I'll get back down there eventually, because I would love to load up more on this. Anyways, Caterpillar is currently my smallest position, representing 0.49% of my total portfolio. They have a current forward dividend yield of 2.12% and pay me $4.44 a year. Some of their high share price that they had in the last few months was around some hype around this infrastructure bill, which actually just got signed into law this Monday. And with the new growth area that is finally confirmed, I get that the fair value for this company is around $250. The next sector is utilities. I've actually been wanting to reduce my overall position in this sector for a while now, but I just don't have any other thing that is like such a great deal that I have such high conviction in that I want to throw that much money into. So I'm just currently letting it sit here and just slowly collect the bigger and bigger dividends that the utility sector tends to pay. But first we have Dominion Energy. They provide electricity to parts of Virginia and the Carolinas. They've also been moving more towards renewable forms of energy. I own 14 shares of Dominion Energy, representing about 2.5% of my total portfolio. They have a forward dividend yield of 3.3% and pay me $35.28 a year. Dominion Energy has a fair value of around $73 a share. Next up we have Southern Company. As their name suggests, they provide electrical coverage to the southern states. They haven't been moving as quickly into renewables like Dominion Energy has, but they do operate a decent number of nuclear power plants. I own 10 shares, which represents about 1.5% of my total portfolio. They have a forward dividend yield of 4.2%, and they pay me $26.40 a year. They have about a $64 fair value price. They're about fairly valued right now. And finally, we have NextEra Energy. NextEra is a huge renewable company with tons of wind and solar farms, with a lot of their coverage focused in Florida. I don't own as much of this company as I would have liked to, because it's been pretty expensive for a while. I have 5 shares representing a little over 1% of my total portfolio. Their forward dividend yield is 1.76%, and they pay me $7.70 a year. Their fair value is around $75, so they're a little pricey right now. Next, we're going to be moving over to the communications sector, where I have 2 different companies. First, we have Verizon, which I cannot catch a break on. It has been my worst performing company all year long. All it does is just go down. With the 23 shares that I own, it makes up about 2.78% of my portfolio. They have a forward dividend yield of 4.9%, and they pay me about $58.88 a year. Their fair value is around $58, so they're at a slight discount right now. The other company in this sector is Disney. Disney got hit pretty hard by the pandemic, and they're still working on recovering from their parks and cruises that got shut down during the pandemic. They also started a streaming service that did very well last year, but it's starting to slow down in their growth. And because of the hardship that Disney had last year, they suspended their dividend. There's been some talk about it coming back, but nothing has been officially decided. For right now, Disney's fair value sits around $165. Moving on, we have the consumer staples sector. I'm sure most of you know the kind of products that these companies sell, so I'll try to be quick with these. Starting off in the sector, we have Pepsi. Pepsi sells a wide range of different drinks and sodas, and they also own Frito-Lay. I have 10 shares representing 3.8% of my total portfolio. They have a forward dividend yield of 2.6%, and they pay me $43 a year. They are a little bit pricey, with their fair value being around $126. Next, we have Pepsi's biggest competitor in the drink business, Coca-Cola. Coca-Cola is more concentrated into drinks than Pepsi. I like Pepsi a little bit more than I do Coca-Cola. I currently own 16 shares, which represents 2% of my portfolio. With a forward yield of 2.97%, they pay me $26.88 a year. They're a bit overvalued right now, with their fair value sitting around $48. And last but not least, we have Walgreens. Walgreens is your local pharmacy, and they've been really crucial to the vaccine distribution. I own 9 shares for about 1% of my total portfolio. Their forward dividend yield is 3.88%, and they pay me $17.19 a year. Their fair value is sitting around $66, so they look pretty undervalued here. The next sector is the consumer discretionary, where I have 3 different companies. First, we have Home Depot. Home Depot is one of my favorite holdings, and that is represented by my higher position percentage in it. I have 7 shares of Home Depot representing about 6.4% of my entire portfolio. With their forward yield of 1.78%, they pay me about $46.20 a year. They've had a big run over the last few months, so they're very overvalued. Their fair value is around $275. Next, we have McDonald's. McDonald's is kind of like a combination of a fast food restaurant and a landowner. This is why I tend to like them over other fast food companies, because McDonald's is more than just the food that they sell. I have 4 shares of McDonald's making up 2.4% of my portfolio. They currently have a forward yield of 2.19%, and they pay me $22.08 a year. They've had a nice run like Home Depot, so they're also overvalued here, with a fair value of around $225. We also have Texas Roadhouse. Texas Roadhouse is personally one of my favorite restaurants, and they've got a really good balance sheet with almost no debt. It's a smaller position, and I only have 5 shares, which is representing about 1.07% of my total portfolio. They have a forward yield of about 1.7%, and they pay me $8 a year. Their fair value is at $87, so they're pretty close to fair value right now. Now we're moving into the sectors that I have a lot bigger positions in, starting off with financials. JPMorgan is my largest holding in this sector, and it's also the largest bank in the United States. With my 16 shares, JPMorgan makes up 6.2% of my portfolio. JPM's forward dividend yield is 2.4%, and they pay me $64 a year. Their fair value is around $130, so they're about 26% overvalued here. Bank of America is the second bank that I own. Bank of America is smaller than JP Morgan, but is still one of the 4 major banks in the US. I own 27 shares making up about 3% of my total portfolio. With their forward dividend yield of 1.8%, they pay me $22.68 a year. Their fair value is sitting around $35 a share. And last in the financial sector, we have Aflac. Aflac is the insurance company with all the ducks. I own 9 shares making up 1.2% of my portfolio. They now have a forward dividend yield of 2.8% after their recent 21% dividend increase. Now they pay me $14.40 a year, and their fair value is actually a bit higher than where they are now at around $65. Next, we have the real estate sector with all of the different REITs that I own. My largest holding in the sector is Store Capital. They own buildings that get leased out to companies like Ashley Furniture, so these are ones that aren't investment grade, but they're still pretty safe. I have 73 shares representing 5.7% of my portfolio. In general, REITs pay out a high dividend yield, but that dividend gets taxed as regular income, so there's a bit of a trade-off here. So Store Capital has a forward dividend yield of 4.5%, and they pay me $112.42 a year. Store's fair value is around $35, so they're pretty close to fair value here. Next, there's one that I just can't seem to stop talking about, VICI Properties, which owns a lot of the Vegas Strip and other casinos, as well as gaming buildings around the country. I currently own 44 shares representing a little over 3% of my total portfolio. With their forward yield of about 5%, they pay me $63.36 a year. VICI's fair value is around $33 a share. And last in the real estate sector is everybody's favorite, Realty Income. I own 18 shares for 3% of my portfolio, and they just recently had a merger and spinoff, so I also own a share of the spinoff, which is the Orion Office REIT, but I'll probably sell that sometime soon. I'm not too keen on owning office REITs. Anyway, Realty Income has a forward dividend yield of 4.1%, paying me $53.14 a year. Realty Income's fair value is around $71. The next big sector is healthcare. First, we have Johnson & Johnson. They just recently announced that they're going to be spinning off their consumer products brand, so the main Johnson & Johnson company can focus on pharmaceuticals. I have 17 shares of J&J representing about 6.5% of my total portfolio. With their forward yield of 2.6%, J&J pays me $72.08 a year. J&J's fair value is around $176, so they're at a slight discount right now. And speaking of pharmaceutical companies, we have AbbVie. AbbVie is a well-loved dividend company with both a high starting yield and very high dividend growth. I have 21 shares making up 5.8% of my total portfolio. AbbVie's starting yield is 4.8%, and they pay me $118.44 a year. AbbVie is currently trading around fair value, which I got to be close to $120. And the last and biggest sector that I have is technology. My biggest individual holding for a single company is Apple. I own 19 shares, which makes up 6.8% of my total portfolio. Apple is by no means a big dividend payer with their low starting yield of 0.58%. I get $16.72 a year from them. And I was surprised when I went through this calculation, but I got Apple's fair value to be around $149. So if they could fall into the 130s, I think this would be a great time to start buying it again, if that could ever happen. The next company in this sector is also one of my favorites, Microsoft, maker of Windows and one of the largest cloud services next to Amazon. I own 7 shares of Microsoft for 5.5% of my portfolio. With its forward yield of 0.73%, I get $17.36 a year. Microsoft is pretty overvalued with a fair value around $240. And last but not least, the final individual company that I own, we have Intel. Intel is one of the big chip designers and manufacturers, but it's recently fallen out of favor in the market for other companies like AMD and Nvidia. But with their new products, they have a good chance of reclaiming the processor crown. I own 6 shares of Intel making up 0.7% of my portfolio. They have a forward dividend yield of 2.7%, and they will send me $8.34 a year. Intel's fair value is around $80, making them look like a really good deal right now. I also own a large amount of ETFs that I use to help diversify my portfolio even more. I'll quickly go through these, and I'll just put up the percentages as well as the dividend yield that I get from them. So I have some growth-oriented ETFs like VOO and QQQ, and I also have more dividend-focused ones like VYM, SCHD, and JEPI. So if we go and add everything up, we get my total portfolio value of around $42,800. I have a yield on cost of 3.3% and a starting yield of 2.77. I have an estimated yearly dividend income of $1,180. Hopefully by the end of the year, I'll be able to get that to pay me an average of $100 a month. We're super close. So what do you think of my portfolio? Is there anything else you think that I should add or anything you think I should sell out of? How is your portfolio doing? Let me know down in the comments below. Thanks again for watching, and I'll see you all next week. Bye.